Hi everyone, welcome to another weekly Forex forecast for the week ending July 10th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the New Zealand dollar versus the USD, as well as the pound versus the New Zealand dollar. And we're going to wrap things up with VeChain or VETUSD, which is a cryptocurrency I've been talking about recently. So we have some really nice setups coming this week, including the EURUSD and also the NZDUSD. And I'm going to show you why I like VeChain over the long term, both from a technical and also fundamental perspective. Alright, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up we have the EURUSD, and I mentioned this one last week where we have this descending channel, which could actually act as a bull flag forming on the daily time frame. So here on the daily time frame, you can see where support comes in down here around 111.70, maybe 111.50. All right, so 111.50 down here is the level I've been talking about now for several weeks. However, 111.70 is what supported the pair back here. So that's going to be support for the week ahead. And as for resistance, I wrote about this last week where 112.90, which is the top of this channel, attracted sellers and also sent the pair lower. Now, this pattern right here, coming off of this rally back here, does look bullish to me. So if the EURUSD can climb above that 112.90, probably somewhere closer to 112.70, maybe 112.80 this week, that could send the EURUSD higher. Okay, so if we do get a daily close above this area, watch for a push into 113.50 followed by 114.20. Alternatively, any type of rotation into that 111.50/70 area, followed by bullish price action like a pin bar, could also be an attractive setup. And keep in mind too that I'm still tracking this wedge pattern on the weekly and monthly timeframes. So this is the pattern that dates back to the all-time lows down here in 2000. And you can see where the pair has just been coiling inside of this structure for the last 20 years. Okay, so this pattern is going to be significant, especially if we do see a breakout of some sort over the coming months. But as of right now, if I look at the weekly time frame, you can see this is the channel that we just looked at. So we have this descending channel here that could take the pair up to the top of this wedge pattern. All right, so if we do see a breakout from this structure over the coming week or two, as I mentioned last week, that could trigger an eventual push up into the 116 area, which is the top of that multi-year wedge. Next up, we have the British pound versus the US dollar. And I talked about this one last week, more specifically how 122.40 could serve as support. So you can see where the pound actually found support around 122.50, just 10 pips above that level I mentioned. Now you can see where this 122.40/50 area has had several lows in the past, and it was also the bottom of a channel. Now, last time I had that channel drawn from this high back here, and in which case this lower level came in a little bit lower. But as you can see right now, the British pound is respecting this other channel using this swing high back here. So we've got this high, this one, this low, and also last week's low. So this 122.50 area is going to continue to serve as support. Now, as for further gains, if the pound wants to move higher, it's going to have to take out that 125 area that I mentioned last week. So 125 is going to be somewhat of a pivot for the pair this week. We could call it 125.30. All right, so if we see a daily close above 125.30, that could signal a push higher up into some of these recent highs around 128. So a daily close above 125.30 would be bullish in the short term, whereas a rotation lower back into 125.50, maybe 125.60 could be a signal of weakness. But as I mentioned last week, the pound would really have to clear this area around 122.40 in order to move lower, perhaps down into 120. So all in all, even though you could play some of these swings and also either a break above 125.30 or a move lower back down into 122.50, just keep in mind that the pound is indecisive at the moment. So we have seen some nice swings here, but it's also been pretty choppy. And as of right now, there's really no clear direction here. Next, we have the New Zealand dollar versus the US dollar. And I wrote about this one last week where we had a false break below this multi-year wedge pattern. So if you'll remember, I kept saying in June that I was waiting to see if this was going to be a false break back here. So this March sell-off and subsequent close below this long-term trend line was either going to mean that 6,200, this region through here, was going to act as resistance, or June would close above it and this down here would be a false break. So June obviously closed well inside this pattern, meaning that this down here is the false break, which could send the New Zealand dollar higher. As you can see, the bottom of this wedge pattern extends from the pair's 2000 lows, so it is incredibly significant. Now, since I made that post, the pair has moved over 100 pips and it is approaching that key resistance level. So this is the top of that multi-year wedge pattern, somewhere right around 65.50. Okay, so 65.50 is going to be the key level to break, at least on a daily closing basis. So if the pair can get above that area, don't be surprised if we see the New Zealand dollar trend higher, perhaps up to some of these recent highs right around the 67 handle. Alternatively, if we see a rejection around 65.50, that could trigger a rotation lower. Now, as for key support, I did previously have 64.30 marked, but I would say that a better representation of the support region is somewhere around 63.80. So for the coming weeks, 63.80 is going to be support, with 65.50 coming in as resistance. Now, if we do see a close above that area, look for 65.50 to become support. And again, we could see a push up into the 67 region. Alternatively, if we see a rotation lower back down here into 63.80 and we take out some of these recent lows, that would signal weakness and could expose that 62 handle. But all in all, given the false break that we just looked at on the monthly time frame and also this short-term uptrend here, I don't like the idea of trying to sell the New Zealand dollar. Instead, I would like to see if the pair can break that 65.50 at least on a daily closing basis. It's no surprise to see the pound versus the New Zealand dollar sitting on a critical support level, just as the New Zealand dollar is hovering below a critical resistance level. Because if we see the New Zealand dollar break higher, this pair is likely to break lower. And I talked about this one on the blog a couple of weeks ago where we had this close below the 194 area. And I also said that 194 should serve as resistance based on some of these lows back here and also these highs. Now, notice what happened recently where the pound did come into 194 resistance and it sold off. Now, I'm talking about this one today because we are seeing the pair test the bottom of that long-term channel. Okay, so if I move out here to the weekly time frame, you can see just how significant this channel is. So as I mentioned recently, if we do see the pair take out that area just above 190, we could see a move down here into 183 based on some of these lows back here. But all in all, if I go out even further, you can see where the monthly time frame too, that this pair has been trending lower for quite some time. So even a push down into 183 could be just the start. So this is going to be one to keep an eye on. And whether we need a daily close below 190 or a weekly is yet to be seen. Just keep in mind that if we see a daily close below this level and an immediate retest of it as new resistance, that could be a sign that it's a false break. All right, so just stay flexible here. But I do think that eventually this level right around 190 is going to fail and we could see the pound versus the New Zealand dollar trend lower down here into 183. And last but certainly not least, we have VeChain or VETUSD. I've mentioned this one a couple of times in the blog recently where I pointed out this consolidation that had formed a wedge pattern. And you can see where after 19 days of consolidating here, we had this breakout. Now, the thing about cryptos is that this breakout right here to today's high was about a 100% move. Even at the current levels, this is about a 70% move. And ironically, I had to refilm this segment because I filmed the other ones on Saturday, and as you can see on Sunday, VeChain has had a nice move here. I believe at one point we were up about 25%, maybe higher, and we're currently up about 17%. Now, as I've stated recently, this is a multi-year hold for me. So this is more of an investment because I love the fundamentals here. I think that what VeChain is doing in the blockchain space is going to be huge over the coming years, which is why I plan to hold this for at least 2 years. And I'll probably keep a part of that position on for the next 5 to 10 years, maybe even longer. Now, one thing about this chart, I wanted to show the volume here because even though volume is a bit decentralized because we're looking at Binance, which is an exchange in the crypto space, Binance handles a lot of the transactions here. And what you can see following this breakout is we had this nice rise in volume back here. So during consolidation, we saw volume decreasing, which is what you want. And ever since the breakout, we've seen this nice spike in volume. And that's good because it tells me that the market is behind this breakout. And make no mistake about it, if we look at the weekly time frame, you can see where VeChain is breaking out of its multi-year range top. So 0.0106 is the top of this range that has been in place for several years. So we're only hours away from the weekly close. And if we do close above 0.0106, which I think we will, it means that that 2-cent mark is exposed with a break above that taking on 0.028. And I want to point out the volume here again because we're already well above last week's volume, which is good to see because if the volume was lower than last week, it would tell me that this was a weak breakout. But as you can see with this kind of volume coming in, it tells me that this break above that range resistance is a strong breakout and that the market is behind this move. But ultimately, even though a 50 or 100% gain sounds great, I think that VeChain has a lot more potential over the coming years. So this is one that I'm going to hold for at least the next couple of years. And this is just what I'm doing. This is not financial advice. You should do your own research. But based on the fundamentals here, everything from the management team to their partners to the fact that they have a working product that's being used by companies like Walmart China and also Shanghai Gas, I do think that this is a rarity in the crypto space, and I still think that it's way undervalued. So again, it's just my opinion, but I'm going to be holding VeChain over the next few years. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.